Hello traders. So if you have been looking for an advanced way of analyzing your chart where you are going to increase your win rate and avoid those situations where price goes and do not reach your take profit, then you want to watch this video, because I'll be bringing to you guys a top-down analysis secret where you can analyze your charts from the daily time frame, right? You drop to the H4 time frame, right, where you look at your market bias, then you drop to your H1 time frame, your 15 minutes or whatever time frame you're entering on. You'll be able to easily forecast market structure, knowing that as price reach this zone, we are going to be selling with multiple confluences, right? Many people get stopped out because sometimes they don't know what is happening on bigger time frames. So if they enter their trades maybe in the 15 minutes time frame, they don't know the zones where they should be targeting. That's why you see price move and sometimes do not get to your TP, or sometimes you just place a trade, it moves against you because it is reacting to a daily time frame or a bigger time frame zone that you ignored. So if you want to increase your win rate, then you want to always do a multiple time frame analysis. And then even if you are trading in a 5 minutes time frame, make sure that you do a multiple time frame to know the bigger zones in which price is reacting to, right? So we are going to use USD card and I'm going to do a demonstration that will help you improve your analysis greatly. Okay, so we have many analysis that we have done in our, like this for instance. Okay, so make sure that you watch this video to the end and make sure you subscribe to the channel if you love seeing content like this. See you after the intro. Okay traders, welcome to my channel.
I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
Okay, so this is USD card in front of us, right? And now it is very simple. Doing a top-down analysis, we are going to use our trend lines, we are going to use many other factors, demand and supply, we are going to use, you know, momentum and all of that, right? So we go to the daily time frame. If you look at the daily time frame, you are going to see we have, you know, an uptrending market, right? At this point in time, we have price broke out from a key zone that was consolidating. Now one of the trades I wanted to take yesterday was based on this aspect, but let me just do the analysis right away. So if you look at this, you are going to see that we had price consolidating here for a long while before it finally broke out of this zone. Okay, so price actually broke out of this zone here and then went up, created, broke up, and then it was pulling back. Now if you look at it very well, you see that price is just reacting to a pullback, and this is the key demand zone that we have, or the key order block that we have on the daily. And because price move in swings, we have the possibility that price is going to pull back to this zone. All right, so here this is what happens. Price goes up, all right, it pulls back, it gather momentum, it goes, it pulls back, except price comes and break through this low. All right, that information is already okay for us based on the daily time frame. All right, so what we simply have to do right now is we need to go to a smaller time frame, so we can drop to the H4 time frame in this situation. All right, so let's just blow this out. Okay, so from the H4 time frame, we already know what we are expecting. This is the daily time frame zone that we have marked out, and we might want to just write daily G1 as demand, right? So we can just mark G1 demand, right? Okay, now in the H4 time frame, what do we see? We see a downtrending market, and this downtrending market is explained by the pullback that we have on the daily. Remember, in the daily we are having a pullback, and a pullback in the daily can be a complete trend in the H4 time frame. That's why you see that here price is doing what? It's creating series of lower lows and lower highs. Okay, lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. But now we are expecting sales, especially for intraday traders, only till price reaches this zone here. That is the next information that we have gotten, right? So that is it. Now we drop now further to a smaller time frame. You can drop further to maybe the 2 hours or the H1. Now in the 2 hours time frame, we have our trend clear here, right? So now you can maybe use your trend line, okay, and then you just connect, right? You just connect the top like that. Okay, this for trend line traders, people concentrate mainly on trend lines. right? Because you already have an information that we are in a downtrend, all right? So price is going to respect one of these zones here. So even in the H1 time frame, you can drop further, and if you drop to the H1 time frame, this is a demand zone here. You can see this is a clear demand zone that has been created, okay? And this demand zone actually is coinciding around this zone, which is, we have our key level. So if you look at it, this is a fair value gap that has been created, this strong bearish move, and price is actually coming back. This is very big momentum, or volume, which shows the bank they have executed some of their trades and they're waiting for price to pull back. And if price pull back to this zone, there will be a higher probability of a sell. So even in the 15 minutes time frame you are entering, you can be marking these zones, considering that if price pull back, you can still sell here. All right, you sell here, you have higher probability of winning the trade. All right, because you already know what's happening in the bigger time frame, and what you are targeting, you know where your limits to be. Because our daily time frame tells us that this zone here is a demand. So for price to break through below, it shows that the trend has changed in the bigger time frame, but it's going to take a while. So we want to be targeting this zone. So that's the importance of doing a multiple time frame analysis, right? So if you look at euro US dollar, you see we have similar situation. Look at the daily, right? In the daily time frame, we have a downtrending market. Price pulls, move powerfully, all right, and then at the meantime, we don't want to be buying. But now price move in swings, because it comes and it pulls back, right? Price moves and then it pulls back, it moves, it pulls back, it moves, it pulls back. So if you look at it now, if you zoom in, we are going to see that price actually, this is the key zone that we have marked out. This is a low here that we have marked out. This is another low here, right? And price could pull down right to these lows below here. So we mark them out to know where our target should be. So if you drop now further to the H4 time frame, you are going to see now that, okay, we had these strong moves, pull back, move, pull back. We have strong imbalances here that left behind what other blocks. So these other blocks here, we can be using them as our point of confluence. People use trend lines, we have connected like this. If you use your trend line like that, all right, you can see that here price came, got rejected twice, came back again. And for people who trade based on trend line, you might have caught this move because you already know what is happening. Okay, so now price has dropped, leaving behind imbalances. Then we have to mark this to be our supply zone, right? And then our supply zone. Okay, so now you can drop further to the H1. In the H1 now, you can see a pullback. All right, but now concentrating just on this, you might think that this is a complete uptrending market. You get, if you concentrate only on smaller time frame, you will not know that this is overall a downtrending market. You will not know that this is just a correction. Remember, we said price move in impulsive and pullbacks, impulsive and pullback, and sometimes the correction can be like this, right? It could be like this before pulling down, right? And that's what is happening here. So if you focus only on smaller time frame, you might not know. Okay, let's just say you were trading maybe just based on the 1 hour time frame or the 15 minutes. You bought here, for instance, you wouldn't have known that there is a catalyst that can push price down. Maybe you just look for a higher price and place your target, and you see that price reaches a particular zone and just start reversing. You'll be wondering why, because you don't do a multiple time frame analysis. So when you do a multiple time frame analysis, you know exactly the kind of zones to observe. You know now that with a multiple time frame analysis, the price can pull up right up to this zone here and still reverse. You can reach this zone, reverse, right? Or you can wait for price to reach the zone, break, maybe come and break out, and then you'll be looking for yourselves, because you know what is happening on bigger time frame. You don't only concentrate on the 15 minutes time frame and all of that, right? So that is it, guys. That is how you should do your multiple time frame analysis, and then it's going to help you, right? In our channel, we do this analysis. You might want to join our channel too. The link will be in the description so that you get updated. So thank you for watching, guys. Make sure that you subscribe to this channel if this is your first time, by hitting on the subscribe button and notification bell, so that anytime I post a new video, you'll be the first to get the notification. See you in the next video.